The Sensex has gained over 10% in the past 6 months, but the exchange to which the benchmark index belongs has really caught the fancy of investors. The stock of India's oldest exchange, the Bombay Stock Exchange, has multiplied more than 5 times in the same period. BSE, the first ever stock exchange in Asia, was established in 1875. But today it is not the only exchange in the country, nor is it the only listed exchange. Exchanges are typically platforms for trading a particular commodity or product, whether tangible or intangible. Exchanges that are the oldest or have the first mover advantage tend to find favor amongst investors. This is primarily for two reasons. Monopolistic nature of the market share, as competitors typically tend to have far smaller share of the business. In addition, regulatory bottlenecks create entry barriers. Second, the largest chunk of the exchange revenue tends to come from transaction fees from the registered participants trading on the exchange. Such revenue is sticky, scalable, and has a high network effect. Moreover, exchanges are necessary for price discovery to sustain a vibrant economic structure. Now, India's three leading exchanges, the BSE, MCX and IEX, operate in different genres. One, BSE is a stock exchange. It operates in the financial sector. The second, MCX, is a commodity exchange operating in the manufacturing sector. The third, IEX, is an energy exchange operating in the infrastructure sector. All the three exchanges are now listed. Also, they are perceived by investors as the gateway to the long-term prosperity of the underlying sectors they operate in. However, the moat, financial strength and valuations of each of the exchange stocks are slightly different. Let us first consider BSE. It is not just the oldest in India but also one of the fastest stock exchanges in the world today, with speed of 6 microseconds. The total number of companies listed on the exchange are about 5,400 in the year 2023, of which around 4,000 are regularly traded. The exchange helped mobilize funds to the tune of nearly 18.5 trillion through the listing of equity, bonds, REITs, InvITs and commercial papers in the last financial year. Since listing in 2017, the stock of BSE has delivered gains of nearly 600%, which is a CAGR of nearly 35%, and 85% of the gains have come in the last year alone. Next comes MCX. The Multi-Commodity Exchange of India was India's first listed exchange. It is a commodity derivatives exchange that facilitates online trading of commodity derivative transactions. Although incorporated way back in November 2003, the exchange enjoys over 95% share in the commodity derivatives market even 2 decades later. MCX has complete monopoly in derivative trading of precious metals, etc. But it is agri-commodities where the entity has yet to catch up with peers. The company has a pan-India extensive reach with over 5.1 million unique clients and a presence in 740 countries. MCX has strategic alliances with leading international exchanges such as the London Commodity Exchange, Taiwan Futures Exchange, etc. for the purpose of seamlessly integrating with the global commodities ecosystem. It also offers warehousing activities through its wholly owned subsidiary Multi-Commodity Exchange Clearing Corporation. Since listing in 2012, the stock of MCX has delivered relatively nominal gains. Finally comes the Indian Energy Exchange. To put things in perspective, it is the job of electricity distribution companies or DISCOMs to ensure round-the-clock electricity supply. Hence, DISCOMs need to buy the right amount of electricity from power producers. They usually have long-term power purchase agreements with power generators lasting nearly 25 years. Once the PPA is signed, there is very little scope for change either in the electricity price or quantity, and both generators and distributors must honor their obligations. Since demand of electricity does not remain constant throughout the year, short-term power is traded on the power exchanges. Over the years, Indian villages and transport systems are to get more electrified. Plus, the demand for power will escalate with the penetration of automated manufacturing, electric vehicles and digital tools. Thus, compared to the stock exchange and commodity exchange, the visibility in the volume growth for power exchanges is much higher. IEX had the first mover advantage. Many investors still fondly remember the stock of IEX for the whopping 800% plus returns between March 2020 and October 21. This was when investors realized that this entity was unlike most other infrastructure companies saddled with high debt and high capex. IEX was back then the only platform for buying and selling electricity in India. It had a market share of more than 95%. Even its financials look unbelievably impressive. However, as new incumbents in the power exchange business, like Hindustan Power Exchange and Power Exchange India entered, things looked less rosy. IEX was no longer a virtual monopoly stock, although its market share still edges around 90%. But regulations around electricity pricing took a toll on margins and valuations. The stock has more than halved since November 2021. Over the last 2 years, concerns over market coupling, which could mean lower margins for IEX, have taken center stage. The investor reaction to this regulatory issue led to temporary sluggishness in the stock. However, it is important to decipher if the stock of India's largest energy exchange has legs. Since listing in 2017, the stock of IEX has delivered gains of nearly 140%, which is a CAGR of nearly 15%. Now coming to the financials of the three entities, the long-term and near-term profit growth as well as the return ratios reflect the nature of the underlying business. However, it is IEX that stands out due to its ability to pass on any rise in prices to its customers. So which is the most consistent and profitable exchange? Superior financials are not the only reason why IEX seems to be the best bet to create long-term wealth. There is more to it. Even assuming loss of market share to competitors HPX and PXIL over the next few years, IEX will continue to be the most dominant player in the power exchange business. Its strong network effect will allow IEX to leverage its strength as trading in multiple sources of clean energy generated throughout the country becomes a reality. Also, IEX has majority stakes in multiple exchanges. IEX launched the International Carbon Exchange and the Indian Gas Exchange as its subsidiaries in recent years. These are platforms for the growing supply of carbon credits and exchange-based trades to meet demand for gas-based fuel respectively. To put things in perspective, India may sell 200 million carbon credits by 2030. As per estimates, the demand from Indian companies would be to the tune of 120 million carbon credits by that year. Rest could be offered to international customers. So while energy certificates and carbon credits are new to India, these sufficiently allow a company like IEX to diversify its revenue stream and get through regulatory hurdles over time. Finally, the valuation upside. The biggest upside to the stock of IEX compared to its peers is in its valuations. Both BSE and MCX currently command steep valuation multiples in terms of PE. IEX, on the other hand, has a far modest multiples in the range of 30s of earnings. Therefore, while BSE and MCX remain vulnerable to market swings, the stock of IEX can sport one of the fastest recoveries. So no doubt, BSE, MCX and IEX are three critical exchanges that hold important roles in India's economic and financial trajectory. But the stock of IEX is bound to be one of the biggest trailblazers on the way. Please note that this is not a recommendation on any of the stocks mentioned in this video. Please conduct all necessary due diligence and consult your investment advisor before acting on any stock. Hope you like this video. Thanks for watching.